Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to discuss pump and dumps and dump and pumps. We'll talk specifically in this video about pump and dumps, reviewing that all trades, when they boil down to it, are either going to be a pump and a dump or a dump and a pump. And a lot of traders struggling. I think a lot of it has to come back to your daily process as to marking up specific charts and acknowledging or identifying candidates that are actually set up for these potential pump and dump or dump and pump opportunities. Traders have lots of charts up and they have lots of things and they're scrolling through and they're like, yeah, but how did you see that? You have to be walking through your charts and identifying candidates that have broken down on the inside or broken higher on the upside. What day count it is. Is it an inside day on day one or opening range? Have we already broken levels? Do we have other time frame traders in the markets? Have we triggered shorts into the markets? Have we triggered longs into the markets? Day one, day two, day three. We're going to review that, the simple templates, whether it be 3 days or 3 sessions or 3 hours, because traders are missing opportunities, not because they're not there, but because they actually aren't following the process. And watching that live doesn't make you better because you're not doing the process yet. So you have to mark up your charts and understand what they look like. And we're going to review that again. 3 sessions, 3 levels. Pump and dumps or dump and pumps. They show up every single day because that is the trade setups. When everything else, whether it be day 3 longs, day 3 shorts, whether it's an inside day false break, an inside day trend continuation trade, whether it's a low-hanging fruit continuation trade, whether it's a first red day, a first green day, it's the same thing. It will be a pump and a dump or a dump and a pump, whether it's over 3 days, whether it's over 3 sessions, or whether it's already in 3 days, but we want to re-enter that dump and pump opportunity for a potential explosive continuation trade, whether that's, again, first red day, first green day. They're all the same. So you have to master the process. So pump and dumps typically are going to start from the low of the day. Now, this is where traders need to step back and actually use some common sense and understand that we could be on a day 3 up high and they might pump it up 3 levels up high on day 3 from the low of the day for a parabolic 3-day collapse. We might be on a day 2 where they might pump it up 3 levels and roll it over for a continuation trade from the high of the day. We might be in a day 2 where they're pumping it up from the previous day's low, 3 levels, and rolling it over for a trend continuation day on day 2. So these are all the little things that are important to step back and look at the bigger template and understand what type of opportunity there may be. Now, for currency specifically, this can be a 3-day type of opportunity. 75 pips on the major pairs, 3 levels of 25. Now, on the more volatile pairs, pound New Zealand, euro New Zealand, maybe the yen crosses, they may move in increments of 50 or 100 on any given week, depending on the volatility of the instrument. That comes back to, again, going back, studying your playbook, and reviewing the opening range and initial balance. We'll talk about that today. And then the timing window. So, for example, we had an explosive parabolic opportunity on the DJ30 today in the first hour that coiled after dropping 50 pips and went sideways from the low of the day for an explosive 100 pip move right at the New York Open. So there was a trade in the short direction, pre-market, and then at 9:30 a.m. New York time, an explosive parabolic continuation trade, low-hanging fruit through the high of the day for a dump and pump template at the 9:30 New York Open. So timings are important. Is there any major red news on the calendar? Ideally, you will be able to hunt out best trade setups when there is no more news on the calendar. This is not a first bounce, a first bar, or a major news calendar scheduled type of situation. We're looking for the pump and the dump. Now, they can coincide with major news, but those are different setups. So, behavior of price in the upper level, we will see in the third level either consolidation, if it's just a normal pump and dump template, 3 levels of rise, consolidation, and the collapse into the timing window. Triple tops, engulfments, lower lows and lower highs. If it's a low-hanging fruit trade, we may see lower lows and lower highs for the 25 to 50 pip pump up, depending on the instrument. The parabolic collapse through or to the low of the day, again, depending on the timings, the instrument, and the type of setup. If it's a continuation trade, pump and dump, we are looking for a possible range expansion. And again, that comes back to understanding the timings, the levels, and the day count. And the low-hanging fruit continuation can be in 3 boxes, which we'll review. You might be just below 50. The market may pump up to just above 75. So we're in 3 boxes, but we consolidate in that middle box. But by the time the market takes out the high of the day and collapses, we have more than 50 pips of tradable room for a parabolic profit target opportunity. Now, this is a basic model. We're going to review this. This could be any currency pair. This can be gold sometimes. This can be oil. It could be one of the indexes. Typically, we will see larger ranges on those instruments, but on any given day in any session, particularly the US, or for me, Asia also, normally these will be 25 pip boxes. The market may work its way down from that low of day and pump up and break down and go parabolic. 1 level, 2 levels, and 3 levels of rise. We can see a market work its way up from the US session maybe, or into Asia, and it might go into consolidation and then pump back up. And in London, we might see a parabolic reversal trade. We can see a market pump up in the gap time from London. Lower lows and lower highs for a parabolic collapse into the New York session. We may have a market that has broken down in the London gap time and begins to pump up into the New York session for a low-hanging fruit continuation trade. So we've taken out the low of the day. We're in a lower 25 pip box. They trade through the middle 25 pip box into the upper 25 pip box before collapsing for a measured move range expansion and the low-hanging fruit continuation trade. Now remember, this is the price increments on the right side of your screen. Any instrument will have numerical pricing, and typically, again, the indexes may show on any given day we might be moving in 50 pip boxes, 3 levels of 50 or oil for a 150 pip box, and a range expansion of 300 from 150 to 150 for a high to low 300 pip area of tradable possible profit target. But the basic model is this: pump, 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 lower lows, lower highs, and the parabolic vertical collapse. We'll take a look at a few instruments, but we're looking at gold. We had Tuesday was our day 1. Wednesday was our day 2 in a 3-day setup. And Thursday was a day 3 high of week shorting opportunity, our low of the day in the upper 100 pip box. Again, there's an example of 3 levels of rise from Tuesday, 100, 100, and in the upper level, a third 100 pip rise. But on the day itself, we have gone from 25 in Asia to 50, 50 to 75, and 75 to double zeros, 3 levels. We've gone just beyond that. So what do? We redraw our levels of our high of day. The market makes a lower low in the London US gap time. That lower low becomes our reference point now for our pump and dump. Now on the day itself, we've gone 3 levels of rise plus a little bit further. The market has broken down from the high of the day and made a lower high heading into our gap time. We now have a market that trades below 50, inside of 50 and 75, and breaks above 75 before engulfing and consolidating sideways into our US session. Again, this is gold, 5-minute chart, for a vertical parabolic collapse that continues after a first bar trade opportunity on the 1-minute chart, which we talked about last week, for 250 pip drop back in line from high of the week to low of the week. A pump and dump 3-session, 3 levels setup heading into our US window. We're looking at the Japanese yen on Wednesday. Low of the week, we have a 3-level rise from the low of the day heading into our Asia session on day 3. The market trades below double zeros, between double zeros and 25 and 25 and 50, where the market has broken down. So understanding that we don't have to be in 3 full levels of trading, we have 3 levels of involvement for a collapse that will potentially do a range expansion as a profit target. The timing window for this instrument, ideally targeting, is Asia. So remember, opening range, initial balance, form our box. We're looking for a parabolic opportunity, either reversing from the high or low of the box or parabolically breaking out of that opening range. So we have our low of the day. The market proceeds to push up in 1 level, 2 levels, and a third push to the high. Right in our timing window, first hour puts a high of the day in place before breaking down and consolidating at our higher low, heading into our second hour for a 75 pip vertical collapse. Again, the pump and dump trade setup, our universal EMA, and we'll talk a bit more about understanding the levels of the EMA once we're breaking down. We can have an average price that the market is already trading inside of when the market pumps up. But understanding that we've gone up 3 levels, this is our template setup for a pump and dump parabolic vertical collapse on day 3. Now looking at gold today, we had a Monday day 1 failed breakout at the high of our new week. We have breakout traders in the market, a market that breaks down in Asia, lower high, lower low, and continues to go lower in our London session, lower lows, lower highs, auctioning underneath the low, consolidating sideways without having taken out the low of the day. Now I repeat this. You heard me say, when a market goes sideways into consolidation without having taken out the low or the high, where on day 2 we are still on the front side of this move. We have breakout traders triggered in the markets. We are targeting the low of the day and also potentially the low of the breakout day, which was Friday. Where is the money? Day 2. Day 2, we have not broken any other daily levels. We have a failed breakout, lower highs, lower lows. That is the setup for the low-hanging fruit continuation trade. The first thing we do when the market breaks the low of the day, 7:59, you've heard me say this. At 7:59, mark your highs and lows. The market breaks lower right off the bat. Lower low on the inside is the setup for, you guessed it, the pump and dump, major round numbers at 50, targeting. I want to get filled better than or as best fill possible at the numbers. We're above 50 in a broken down market. We're targeting the low of the day. We had an opportunity to position ourselves in this market. So remember, lower low on the inside, pump 1, 2, 3 engulfments for the beginning of the collapse and then the breakdown prior to major red news. 1 hour down. The market puts in a low, pumps up on major red news. Low hanging fruit continuation trade. Excellent question from a trader. Was this a first bar entry? Now, coming back, we're already in a broken down market. So this market after the major red news, we had pump up into the double zeros. You can see our micro M structure. Anything underneath, around, or close to double zeros would have been an opportunity to hit this trade. I was already off the screen at this point, or getting off the screen, wasn't interested in trading that. I'd already been in that first hour move down. But understanding that once we've gone up, we have 1 pin, 2 pin, 3 pins, 4 pins, but we're above the double zero, so we want to fight for best fill. Thesis being, again, we redraw our low of the day. We want at least 50 pips of profitable target as a profit target. So we look at our levels. 1, 2, and we're into the third level. 3 pins up top, and the reversal for the collapse back down through the low of the day. Low-hanging fruit continuation trade in line with our existing thesis of a broken down market on day 2, pumping and dumping. Peak formations are up. So coming back to repeating in a session, peak formations are in sessions. U.S. sessions making peak formation highs, lower peak formation highs. We're making lower lows. At that stage, the low of the day was not in place yet. And heading into the later part of the afternoon, at this stage, we have a lower peak formation high. We've taken out the low of last week, and I do not see a final peak formation low in place yet. We could see that before the end of the day. No idea. Don't care, but we have day 1, day 2, and at this point also still on the front side of this downward move. Day 1, day 2, pump and dumps in the U.S. session and low-hanging fruit continuation trades. We're looking at the British pound. So on Friday was our low of the week. We have a market that broke down below double zeros and put a low of the day, low of the week in place after triggering breakout traders. Into the close of the day, it then proceeded to mark up 25, 25, and 25. 3 levels of rise up to 75. That became our potential area for a pump and dump type of template. We have a pump day on our Friday heading into our new week. Monday was an inside day that then became also a first red day at the close of the day. First red day is a day that closes below the open after the high of the week is in place. We have an upper level of volume that breaks down after the first red day. Lower highs, lower lows on the inside that pumps up into the close of our U.S. session before breaking down into our new day on day 2, Tuesday, which is also the first trading day of August. Now, I also want to point out the closing price level after our first red day. Closing price level. So we've closed as a first red day and the market breaks lower, triggers new lows. We have a lower low on the inside. They make an even lower in the London session. We redraw that level. That becomes the setup for the pump and dump heading into our gap time. We have the pump and dump template at the end of the 12 candle window in London, which potentially set us up for a low hanging fruit continuation trade, which some traders were already short in the market prior to the U.S. session. Once the timing window kicked in and we had major red news at 10 a.m. New York time, they pumped it up for a 25 pip continuation trade. This is a 15-minute chart, but the low-hanging fruit continuation trade. We break the low prior to the news, so we redraw our levels. Lower low on the inside. Pump it up, major red news for the 25 plus pip collapse. Continuing with our already broken down market and shorts that are in the market with a short trade back to the low of the week. Now, coming back to understanding this is a 3-day setup. 3 levels of rise, consolidation, lower lows, lower highs. They pump it up and break down into consolidation for a vertical collapse at the London gap, right at the end of the 12 candle window, and a low-hanging fruit continuation trade after major red news. Now, I want to look at the New Zealand dollar as a specific example of understanding the importance of Monday's opening range. Our Monday right here, delineated by the pink line. We have an opening range that breaks out on Tuesday. We have breakout traders in the market. When I have that, we now have a market that has potentially put a peak formation low of the week in place underneath 25. 25 to 50. 50 to 25, sorry, to double zeros. 75 to double zeros to 25, and 25 to 50 is 3 levels of rise. If that market continues to break higher, we may see something at 3 levels of rise, day 1, day 2, maybe day 3. We don't quite get there on Wednesday. We had the Fed on the Wednesday night, or Wednesday afternoon, New York time. They go parabolic on Thursday, which again is a different type of opportunity. There's a parabolic long trade, 3 levels of drop, upper box, middle box, and a short squeeze, parabolic, blowing off in the direction of the trend, but we'll talk about that in the dump and pump scenario. Right now we're talking about the pump and dump, and on currencies, how we may be looking for only 1 or 2 parabolic opportunities in a weekly template. So when traders say to me, you should do this live for me, I'll understand it better, that means that's laziness. That is laziness, because this is a 3-day template, 3 levels of rise, 3 session setup for a parabolic collapse on a Thursday at the high of the week after 3 levels of rise, opening range, initial balance. We have breakout traders in the market, consolidation, Fed, and a vertical parabolic explosive move through the high of the week and through the high of the Fed from traders who have shorted the Fed into a short squeeze for the 3-session parabolic collapse on our free cash Thursday. So you have lots of time. You can count to 3. You can tell time, and you can look for the opportunities, which are pump and dump scenarios. This is a 5-star opportunity. I don't care if it's 25 pips. The parabolic dump and pump is a 5-star opportunity if you understand how that sets up, and we are targeting the high of the week. So 3 levels of rise, opportunities that can present over 3 days. And in this particular case, obviously we have day 1, day 2, day 3 from our opening range, and that can coincide with the type of announcements on the calendar. When we have a Fed week, this is not that uncommon to see Wednesday reset and take traders up high for the false break reversal opportunity. So 3 levels of rise, consolidation, the timing window, the levels, the behavior of price. Powerful, 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 highly profitable, explosive trade opportunities. You need to be diligent and understand what you're looking for. This is not, hey, show me what to do live today. This is you having a process day in and day out that takes 5 minutes. And then looking on the day, have I got an opportunity on this instrument? Yes, no, next. If I do, what do I need to see? What is the behavior of price that I need to see to have an entry opportunity into this market for asymmetrical risk reward? I'm up high with a sell setup. High of the week, low of the day. Understand we have breakout traders in the market, day 1, day 2, day 3, in the markets for a parabolic vertical collapse. There are 2 types of opportunities on day 3. Parabolic trend trades. We had an Asian parabolic, day 3, blowing off in the direction of the trend. We had a parabolic reversal, day 3, high of week to low of day. All on one pair, the New Zealand dollar. 2 5-star, hugely profitable opportunities for traders that are staying on top of their process, and they understand pump and dumps and dump and pump trade setups. Focus on these opportunities. Go back and study your charts. 3 levels, opening range, initial balance. Day 1, day 2, day 3. Master your craft 1% better every single day, traders. And may the markets go with you.